The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I posted today is the chart of Twitter. It always amazes me that people won't buy it when it's 30, but when it's at 48, everybody wants it. So it's left this huge gap and completed this bearish Gardley in a downtrend. And the stock is going lower, in my opinion. Maybe not today, but it certainly has some bearish implications. It's been very good technically. As you can see, when it first came out, it rallied up and then dropped 127% of its offering price down to the 127, and here we are right back at the 50% retracement of all that today with an ABCD. We've got our first caller from the rich people's capital of the West, Park City, Utah. Peter, are you there?
Yeah, I am, Larry, and I want to really, really, really thank you for bringing the monsoonal flow up here so that we're getting rain for 3 straight days in the middle of a huge drought.
Yeah, I am too, but the problem is that we have such bad monsoons here in Tucson that the electricity gets knocked out all the time, and I have generators for my computers, and when they kick on, it gets a little scary because they they make this startling noise, and it's very exciting anyway. But we have been getting a lot of rain here in Tucson.
We appreciate the rain you're bringing us, and supposedly a little bit more next week. And I'm like, the fire danger is going down dramatically with this. So,
we need
thank you. Yeah, I know, no kidding. Hey, I want to talk to you with the euro. We've talked about it for a while, and starting at 136.50. So, my analysis, I went through it. We took out the 134.5. We've got off the 127 level, 0.618 at 132.14, I believe, futures.
Yes.
We've got the ABC down, actually is right in that range as well, and we stopped dead on today on the 1.272, so if we go down to the 1.618, if it breaks today's lows, we're looking at 132. Short-term targets.
Yes, what I'm posting into Tiger TV, which is the euro, it's the U.S. dollar index, which is 53% of the euro. Mm-hmm. And it's completing a perfect ABCD pattern today up at the 81.75 level. That's what's happened so far today. And so to me, this is very, very important because it's such a beautiful chart. It's technically is about as perfect as you can possibly get. And that you also are looking at something where you've got a situation where it's so weighted with the euro that this could be the indication. Everybody's very, very bearish the euro right now, and this is where you could possibly get a rally. But believe me, if the U.S. dollar should strengthen above 82, Peter, there is this thing could really go. There's no question about it. I'm going to put the long-term chart for the euro into the den so that you can see it. And
it's crazy. It's set up both ways because right now you're right. You're at that line in the sand, and you've got the ECB coming out with their their meeting overnight. We're by 7.
Well, I agree with you, and of course, they know what they're going to do ahead of time. Now, whether they're going to reverse it or not, I'm not sure, but I really think that the problem is a lot more deep-seated than people realize, and that is because if you're looking at interest rates, U.S. interest rates are really going quite a bit higher today, given the notes and the bonds, which tells us that should lead to a stronger dollar versus the euro, which is what we're seeing. Right. So if the ECU comes out and does something, really unusual, you could see a huge move in the dollar either way. So it's going to be difficult to have a position.
On which way, right. Exactly. Yeah. Thank you. Okay, yeah, that's what I was thinking too. I'm like, it could go, it could be even temporary. It could be like a one-day event. But,
yes.
Clean out shorts, boom, and then all of a sudden the trend's back down in the euro.
Well, that's what happened in stocks today with the GDP number coming out, at 4%. Stocks were really strong in the futures market only. The regular stock market was not that strong at all. By the time it opened at, 9:30, it was really up just a very tiny bit, not like what the futures were doing. So it's going to be interesting no matter what, as it always is at Fed time. And, of course, the Fed is, a very big player in the markets. But I do agree with you, Peter. This Euro chart really looks bad. To me, it's got 127, written all over it. It's trading at 133.75 now. And the ABCD is down at the 132.15 that you mentioned. So that'll be the really key. Anything below 132 in the euro is going to set this. Yeah, it's going to set this thing down quite a bit. And people don't realize this, but when we started trading the euro back in '99, it started at 135. It went to 85. Then went to 160, and then back to 85 again, and then up to 140. So it's had some, really, really wild swings, and that's what you want. So we're going to see some more of those starting soon.
Well, you know what's fascinating actually over the last month is watching how the margin on the euro has decreased.
Yes, that's they're trying to get. What they're trying to do. The margin is what they're trying to do is to take money from the forex, from the forex banks, because they'll give you 40 to 1 or 100 to 1 or 400 to 1 leverage, whatever you want, because they're not regulated like the futures exchange is. So that's what they're trying to do is to drop the margins. In fact, the margins on most future contracts are relatively small. You get a 50 to 1 margin on trading E-mini futures if you want it. It's really they're making it easy for you.
It's $125,000 for 1925 in the futures for the euro.
That's right. I know. It's very good, and it's so liquid that you can get in and out, without any trouble at all. So the forex is so big. Oh yeah, the size is ridiculous. Yes.
You can.
I look at some of the bank trades because I have some friends at a forex bank, and I watch the bank trades that go through there. 100 million, 150 million. It's just amazing, the amount of money that goes through there, and that's usually not spec money. That's money that's actually, hedging up euros against U.S. dollar for something that they've sold.
Yeah, it's astonishing when you just look at it, and it's like you can watch tick for tick, like size of contracts going through, and it's like, oh yeah, there goes like 400 euros, which is okay. That'd be $5 million, just like in a click of a finger. It's like no.
Oh sure. Well, some of the hedge funds that that they'll do 10 times or 20 times that without any trepidation at all. They'll just get in there and swing huge numbers. And during during the market hours, from basically 4 in the morning New York time until 6 o'clock New York time, the market is incredibly liquid. When Asia opens up, it's okay, but nothing like what it is when London and the U.S. are open. And London is the capital of the forex market. It's not the U.S.
It's 1 a.m. Mountain, so it's at 3 a.m. Eastern is when I start paying attention about 2 a.m. Eastern. But yeah, it's like once you get to about 3 a.m., it's who knows what's going to happen. It's like volume comes in like. It's amazing.
Well, and it hits the fib numbers really nicely, and that's what we're looking at. So as long as the patterns keep holding up, it's certainly tradable. But I think the folks listening should listen to 132.10 on the euro, because below that is really going to accelerate.
And I think it's crazy. It's like the 1.272 today is perfectly held.
Yes, so far.
To the tick. Yeah, so far, exactly. Yeah. Hey, Larry, thanks. Always just wanted to kind of confirm my thoughts.
Yeah, thanks for calling in from Paradise, Peter. I certainly appreciate it.
Hey, thanks.
Okay. We were talking with Peter from Park City, Utah, and I was bringing up the U.S. dollar index and how it relates to the euro, because the dollar index is 53% weighted by the euro. It's completing an ABCD pattern up here at the 8180 level. We have the Fed coming in today. The ECB is going to be talking too, so there's going to be a lot of things going. The key point to look at in the euro is below 132. That would break the 61% retracement of the low we made back in last July. It would also take out the ABCD pattern that has been forming when we made that last 61% retracement up at the 140 level. So it's going to be a very interesting day. The market is telling us that the news coming out of Europe and also the Fed is not going to be good, but you just never know. We had a really wonderful GDP number, and the market just turned it around and it went down from there. So the news will react to what the trend is, and right now the trend in the euro is to the downside. The short-term trend in the stock indices is still down, but the long-term trend, of course, is still up. And that's a key factor to to keep in mind when you're doing this. Folks, I think the whole problem lies in one chart that we've been watching all for the last several weeks forming, and that is the chart of the, if I can just get it to come up. Just hold on one second, please. And there we go. We should be okay. And I'm going to put the 4-hour chart of the notes. And as you can see, when you see that big down move that we're having in notes, that means that the 10-year notes have risen in, they're going down in price, which means rates are going higher. That's a big point. We're almost at the 61% retracement of the low we made last month. In June, on June 3rd, that comes in within about 4 pips of where we are now. And I'm sure when the Fed comes out today, they're going to be jawboning against these numbers. They finally got a wonderful GDP number, 4%, that's totally surprised everybody, with the exception of the marketplace. That didn't seem to be surprised. It did at first, but it turned around and came down a little bit. But it's still very early in the day. By the time the Fed comes in, these markets could be making new highs. You just never know because it's so volatile. And that's the good part of this, is that we're seeing such incredibly good volatility. Our good friend, Mr. Basil Chapman, was on talking about his VIX index, and I call it his VIX index because nobody is better at that than Basil Chapman. I've heard a lot of people talk about it, and it wasn't until listening to him starting about 6 or 7 years ago that I really started to watch it closely, because it hits these numbers off of the Fibonacci summation sequence with near perfection. Last week, earlier in the week, we had a pretty big move in the VIX, and then we pulled down Friday, and also it was actually Friday. It was on the 24th on that Friday. He talked about 1141, and the market went to 1141. It didn't go to 1140. It went to 1141. The next day, it went to 1142. So it had the low 2 days in a row at the exact number that Basil said it had to hold with, and that's exactly what happened. And if you reverse this, this would have been the Fibonacci retracement back in the S&P futures and the S&P cash to spot that particular area. That was same thing with the Dow, but the NASDAQ was able to make new highs. But the NASDAQ, of course, is 100 stocks on steroids, so you don't really look at it as closely as you ordinarily would. We're getting a little bit of a bounce here in the Dow. We were down about 90. We're only down about 70 now. So we'll be right back after this message.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts
Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have a caller from Tampa, Florida. Scott, are you there?
I am, Larry. Thanks for taking my call.
It's my pleasure, my friend. What can I do for you?
Okay, I know you were looking at silver. And you were looking at silver doing an ABC, retracing to a 382 of that swing up, and you were discussing how that was an important signal. However, that swing up is from the end of May, beginning of June of this year. If you look at the swing down with lower lows and lower highs, something that's easy to identify. There are a lot of swings you could pick. But if you look at the swing down from September, it's also up to a 382 retracement of that swing.
It sure is. It sure is. That's why it's at the moment of truth. If we go below 19, we're looking at SLV, the ETF for silver. If we go below 1950, it'll be very bearish. And as a matter of fact, Scott, I think we were on last week when we were talking about this, and we were just hitting that 382, and it's been 5 trading days, and nothing has really happened. It's within about 20 cents of where we talked about. That's not a good sign. Usually when it hits a 382, it takes off out of there and goes, quite fast, especially when you have the nice ABCD that you have on the daily too. That's how I interpret it.
Well, let me ask you another question, and I never think like this, and I don't understand the dates and the time. I understand them, I just don't remember them. About option expiration and manipulation of the metals that seem to be pushed down. We're at option expiration week, are we not?
I'm not even sure because I don't do anything in options. Maybe once or twice a year I'll do. But as far as the manipulation, I don't know how much of that goes on. There's such a large market for cash silver and cash gold. I just don't know how much manipulation goes on. I know some goes on because anytime there's money changing hands, there's got to be a greed factor in there somewhere. But how much it is, I don't know.
Well, let me pose this as another scenario. Your comment was if you hit that line where you think there should be a bullish move and it doesn't happen, that's a sign of maybe the analysis isn't going to work out. But the other way, assuming it is, because I do believe I do believe there is manipulation, and I do believe, although I haven't done the study, that metals tend to get reamed at the end of option expiration in the near past. It's a repeatable behavior, and if it is option expiration week and the metals don't get pushed down. And that includes gold because gold and silver are not doing bad today. And also the dollar's going up, and these metals are not getting hurt today. I mean, there's some things that might tell you that maybe they're holding in a time when you would really expect them to go lower. And
I agree.
Maybe there is a sign in there that the currencies, because you're talking about the dollar maybe moving a little bit more, the euro, that we're close to maybe a turning point, and that there's a relationship to those currencies and the metals as well. And so, what do you think?
I agree with you 100%. I think it's whatever happens with whatever the Fed thinks they're going to say today, or how it's interpreted, will probably make the market move. But the fact that that they've held up during this, when it usually drops when the dollar goes up, is a very very interesting phenomenon in itself. That's why the news moves the market for a short period of time, and then it continues on with the trend that it was already in. So this will be a very critical day, and you can see the kind of action we've had, in the stock market, up and then down 100, and then coming back to only be down, 50 or so. So you're seeing a lot of volatility, which is what you'd like to see.
And just one more question, if you don't mind.
Please, fire away.
To you, that ABC and a measured move higher from an ABC is at a 382 retracement. Your priority of thinking is that ABC. Would you agree with that? I mean, that's a critical pattern for you, the ABC.
Absolutely.
However, for the ABC to really have a threshold significance to you, it would have to go above that pivot, the B. Right?
Absolutely, yes. It needs to do that. That's the first key part of what you're looking at, is to make sure it gets above there.
And that's about a 5% move or a dollar move or so. And so really your comfort zone that you're in an ABC requires at least that threshold, that dollar move above that pivot. Would that be right to you?
That's correct. That would be equivalent to about $20 in gold right now. So that there again, you're talking about nearly 5%.
And then from there, you can expect the $2 move higher.
Yes, sir.
Okay,
hey, listen, thanks for calling in, my friend. I certainly appreciate it, and may God bless.
Thank you.
You bet. That was Scott from Tampa, Florida. Got the Dow down about 60, and gold is holding its own, only down $3.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've posted into Tiger TV the New York Stock Exchange Index. As you know, I feel very strongly that this is really what the market is doing. As you can see, we topped around July the 3rd. In the NYSE. We then had a big Gartley form back on the 24th of July, and we've completed an A, B, C, D off of that pattern so far. Today, the low was the exact A, B, C, D. Now, whether that's going to be the low of this move and then we have another move up or not will probably be in the hands of the Federal Reserve and their chairman. But should we go below these lows, which is 10,880 in the New York Stock Exchange Index, which is equivalent to 16,800 in the Dow Jones Industrial Average, then that would tell us that we would be looking, not 16,000, let's call that 18,000. Is that, no, I'm sorry, it is 16,800 in the Dow Jones. Would be the same equivalent that we're looking at the NYSE. The problem is the Dow is only 30 stocks, and the NYSE is over 2,000 stocks. And the Dow stocks are basically price weighted. They're not cap weighted like they should be with the New York Stock Exchange Index. So that's the key thing to look at today. If we break below that, that means we're breaking below the July lows that we made way back on July the 8th, and we tested them again on the 17th. And that would tell us that the market would be most probably, heading a lot lower. That's the exact opposite of what we're looking at with the VIX index, because if it can get above that 1,300 area around 1,350 in the VIX, that tells us that we've got a little fear coming into the market this time, and we'll see how it's going to work. It's in the hands of the Federal Reserve today, folks. They will put out whatever is necessary to do the things they think is necessary to protect their positions, mainly, and the secondary thing that they do, if they have the time, would be to try to help the working man and the little people like you and I. But believe me, it is a bank for banks, and if you don't remember that, you are doing it at your own peril. So you have to keep in mind that they do have positions sometimes where no one knows what their positions are because they don't have to report, but they don't have those 200 traders there washing windows every day. I can promise you that. And they're able to actually see the information ahead of time. So that's what I think is the important thing, to keep in mind. We've got the gold has stopped right at the 786 retracement so far. We were thinking that 1303 might hold, but after we got to the 618 retracement up around the 1311 area, we broke down below it. That set up lower price objectives, and we must hold this 1294 level today because that is the 786 off the low we made just about a week ago, and so that makes it a very key level. Below that, it tells us that we're going to have gold down into the around 1270 to 1260 per ounce if that fails. Now, we're still having a lot of selling in the grain markets. Wheat, corn, and beans are trying to make some type of a bottom in here from last week's lows, but it's still quite early, and it's way too early to tell if that's going to be the case or not. So we'll have to see what brings these next few days of trading. But it's so oversold in the grain markets, we could get huge rallies and it would still be, very, very bearish. They're expecting huge crops. I believe tomorrow, for almost certainty, we're going to have Rich Anderson from Anderson Capital Management on to talk to us about the meats, and especially the grains, and some of the political things that are going on at the Chicago Mercantile Exchange that might affect us all. So we have to look forward to having Rich on to give us some insight on what some of the larger traders are doing and what some of these political things are that are, affecting the markets. But that'll be a little bit later. The one thing I wanted to mention to you folks is that when you're looking at these currency markets, we talked about the euro, the importance of where we are in the euro. We're at a 1.27 expansion on a weekly basis down here at this 133.50 level, but we've got much lower price objectives at 132, and below 132 means the market is going to be accelerating, to the downside. And we've been in a very bearish euro market for a very long time, and here we're coming into announcement day, and either all the news is out or it is getting ready to capitulate to the downside. Unfortunately, it's very difficult to do any trading during the time when the Fed is in there talking, because most traders are smart enough to take this illiquidity that you have during that time and use it to stand aside. So that's what I think is a key that we have to to be watching. The overall bearishness of the market, the stock market itself, is still not apparent. We need to get below 16,800 in the Dow Jones, and that would tell us that yes, we are getting close to that level, but we haven't reached it yet. We're trading at around 1862 right now, and the Bradley model is telling us that we are starting down. We've taken out the lows of last week, which is very important. We have not done that in the S&P, nor have we done it in the New York Stock Exchange Index, but we have been able to do it in the Dow Jones, and I will put that chart in here so that we can all take a look at it. And I'll put the Bradley model in it to show you that we are, looks like we're heading, starting to head down anyway. Whether it's going to continue in this direction or not, we don't know. And we're down in the Dow now. We're down 5 days in a row, so we're very, very oversold in itself. So that tells us that we're probably going to get some type of a snapback rally either today or tomorrow, or we're either going to melt down. It's going to be one of the two. I don't think we're going to be trading here after the Fed speaks. So this is going to be the key thing to watch as far as where the market is supposedly going to go. The question has come up about the price of gold and relationship to the euro. I've looked at that over the past, and I really can't find any. There are times when there seems to be a correlation, but it goes back and forth, so that's really not a correlation at all. A good correlation is something like the Japanese yen dollar versus the Nikkei. That has a very strong correlation, better than 90%. That's a really good one. Like gold and silver together correlate very well. Usually they go up and down together because one is a semi-precious metal, that's silver, and gold is the precious metal. So they usually go hand in hand when they do this. So that's the key thing, to keep in mind when you're looking at these different correlations. But you've got to get something that stays correlated for a long time. You remember we watched copper go down and down and down for 2.5 years when stocks went up, and that tandem between the stocks and copper had an incredibly high correlation that lasted for well over 20 years. In other words, the overall trend of copper and the overall trend of the stock market, could be, validated. And that's not been the case because we've had copper in a protracted bear market for a very long time. It's been rallying recently, but very mildly. And yet we had stocks go, absolutely straight up. We're having the same thing happening with, the junk bonds and the 30-year bonds. The junk bonds have finally started to break versus the 30-year bonds. In other words, people are searching for quality in their yields. Spanish yields, the 30-year Treasury in the Spanish bonds, their treasuries, are still at a discount to ours. In other words, the yield on a 30-year Treasury for Spain is lower than it is from the U.S. And that's with the U.S. dollar going up. So I don't know what that means, but it's certainly going to be quite interesting. These interest rates are, the charts are so bearish on the interest rates, I don't know what the Fed can do to turn that around. They can do anything they want, of course, and they usually do, but I frankly don't know where it's going to turn, because it looks like we're looking at much higher rates down the road here, and we don't need to go much below the 130 5 level in bonds. We're trading at 137.5 right now, but if we get below 135, that's really going to put a negative tone to the bonds, and that would mean certainly higher interest rates. But longer term, that certainly looks very bearish. It doesn't look like it has any friends in here now, and I'm expecting it to continue to the downside. I think it's important to watch, but I think the key here is to watch what the interest rates do today. We're only off a little bit. The bonds are only off a point. We haven't had a point down in bonds in a long time, and the notes are only down about 20 points. So it's been a pretty active day there, but that's still nothing dramatic. That key level in the Dow Jones Industrial at 16,800 is something that really needs to be paid attention to, because that would take out the lows of early July, and here we are coming into the end of the month. That would be a very negative environment if we close below the lows of last month in the Dow. That would really signal to folks, wait a minute, this trend might be heading down, and it would do it on a time where we had just made a higher high just recently. So it would be almost an outside week, like where you had a higher high and a lower low, which is a very negative signal and could last for a considerable length of time. But the Nasdaq is still holding its own relatively well. It's still up on the day. And, of course, when you got stocks like Twitter that close at 38 and open at 48, that gives you a really good indication that there's some volatility in those markets without any trouble at all. Let me refresh this, and we'll see where we are, because I believe we've got the here we go. Here, oh, I've got some bad data. Doggone it. Let me see if I can correct it. Some of these data vendors. There we go. Yeah, we've completed the butterfly top. Actually, it's a 3 drive to a top pattern in the NASDAQ, and we rallied up to the 786 this morning on the wonderful GDP news, and right now we're just up on the day, but we're up quite a bit compared to the rest of the markets, but it's holding its own up at this level at 39.50. We need to get that one almost 100 points lower. See, the NASDAQ is trading at 39.50 with a low last month of 38.50, and we're almost at last month's low in the New York Stock Exchange Index and also the Dow. So what Brazel talked about is a bifurcated market, and I did look that up in the dictionary, and that means there's two things going. The key there is the buy. I don't understand the bifurcated, but I got a rough idea what it means. But that means that these are two different markets, so you've got to trade each of them separately. If you'll remember back in 2000, the NASDAQ stayed up for several months. The Dow topped in January, but the NASDAQ did not top until March. On March 24th, that Friday was the high day in the NASDAQ when it was near 5,000. So that's nothing happening. It's the key level to watch in the NASDAQ is, of course, the 38.50 level in the Qs, because that would be the spot where you would be going below this last month's lows, and that would be in itself a very negative sign. And if it were to do it, in one day, that would be incredibly bearish, because it's not going to give people a lot of time to get out of their stuff, if in fact it should turn down. But folks, it hasn't turned down yet. It's held exactly where it's supposed to held so far today. You know, the New York Stock Exchange Index did it, the S&P Index did it, all of that lined up, absolutely perfectly. So that's the key to, what you're watching when you're looking at these things. So it's a numbers game, and like God, one of the things they said, God does indeed geometricize, and he doesn't roll dice with the universe, and that's why we're able to do these things with pattern, recognition. But we have to determine is if the juice is worth the squeeze. In other words, the amount of risk that we have to take is the profit available to us to take that risk. And that's what we try to do, is to get a 2-to-1 or 3-to-1 risk-reward ratio on the trades that we're looking for. So, and if you can only come out with like $1.50 won for every $1.50 lost, and your probability of expectation is better than 50%, you have a game beater. And if you practice this, I think you can be far better than 50%, because 50% is nothing more than an average. And this is not an average business. You have to be above average, and that's the key that we look for when we're watching some of the things that we're watching. Someone asked a question about this support that we have at 132 in the euro. I will bring this up. What I'll do is I'll blow this long-term chart up a little bit so that you can see it, and I'll put the euro chart in, and you'll see that it'll be a 1.27 off of the lows that we made from November of last year. That comes in, that comes in almost exactly at that red line of 132 is where that comes in. And it's very close to the ABCD also. So this is all falling into play with that dollar index getting up here to this, 8180 level. We're at 8158 right now. But you also have to look at the yen, and you have to look at the pound, and you'll have to look at the Canadian, and you have to look at the Australian dollar. Those are the big ones. If you add all those together, you're looking at more than 80% of the value of the U.S. dollar index. So it's key to do that. So we're going to take a little break here, pay some bills, and we'll be back shortly.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I've been asked to put a chart of crude oil into the Tiger TV, which I was able to do. And as you can see, we've been in a short-term downtrend looking at this hourly chart over the past several weeks. We have some pretty strong support down at $100 per barrel, but the tops have been lower, the bottoms have been lower. It's following a channel line to the downside, and it is looking like it's going lower. So we have markets that look like they're going lower in the greens without anybody's argument there, because they've been going down for so long that they don't have any friends at all. And the other thing is that it looks like crude oil if it gets below $100 per barrel, could easily break down below the $94 a barrel. And that's the key worldwide figure, folks, is $94 a barrel in West Texas Intermediate crude, because that's where the line in the sand is drawn with Russia, because that's their break-even point for making money. I don't know how you figure that when that oil's been there for 2 billion years, that their break-even point is $94 a barrel, but that's what the scuttlebutt is. And if you believe that, I still have 2 shares of the Brooklyn Bridge available for you at a reduced price. So we'll have to wait and see. But right now it looks like the crude is trying to hold, much like what we have going on in the gold and silver. But with the Fed speaking today, with liquidity going to be crazy right during the Fed time and afterwards, we're going to see some huge swings. And that'll give us an idea of where we're really going, because if big money comes in there swinging in, the market starts to go higher in the gold and the silver, that would certainly be telling you that, yes, this is what's going to happen. Most probably we're getting ready to go, to the upside if it can hold these levels. We're just at such critical levels that it's difficult. And it's hard to go into the report because, it's not that your stop is not going to get filled. It's the fact is, it's where is it going to get filled, because you don't have other traders in there. They're not, they don't want to go into the time when the Fed is working. They do it after the Fed comes in, when, more players come in. But to go right in there during the Fed time is a crapshoot, and it's really not necessary to do that, in my opinion. Now, whether that's going to be anything to hang your hat on or not, I don't know, but that's the way it looks like to me. We're just at such critical level in all these things: the Dow Jones, the gold, the silver, the Treasury bonds. They still look lower, and the Treasury notes. But the other stuff is at real critical levels, especially the euro. We're at a level that could, literally take this thing down to 127 or 126 if it comes unglued. And believe me, below 132 in the euro, the glue is off. I mean, that's the last part of it, because that means that you'll be heading down, a great deal. That's the way that it looks like from my point of view. So we'll have to wait and see what the Fed does. But they got their wish. They got a 4% GDP, and I guess they're now looking for 3% unemployment, and they'll get that just as soon as they keep taking people out of the lines that have quit looking for work. So we'll see how that one works out too. But the GDP number was a very big surprise. The market reacted negative to a big surprise, with the exception of the NASDAQ. And even the Russell was actually held up a little bit, even though it's up, very little on the day. At least it's posing a small profit, but it's been hit worse than the rest of the markets, because the small caps have been under more selling than the others. Someone asked me a question about the price of hogs and cattle. We'll cover that on the show tomorrow. We're going to have Rich Anderson from Anderson Capital Management on. A lot of things are happening politically and with supply and demand that we really need to look at, and we'll try to get him to give us his best estimation. And boy, he's been spot on, because he was very bearish soybeans at $12.42, as you remember, and also wheat and corn, but particularly soybeans, and they dropped over $10,000 a contract. So we'll see you all tomorrow. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.